How to get a mortgage in Portugal as a non-resident. Buying property in Portugal as a non-resident is absolutely possible, and in many cases, it's more accessible than people think. The real question isn't whether you can finance your purchase, but how to go through with it in a smart way, from what banks are looking for to how much they'll actually lend. So let's take a clear, practical look at how mortgages work in Portugal for non-resident buyers. Portuguese banks tend to be more conservative when lending to foreigners, and the upfront costs can sometimes be higher than what you'd expect. Add to that the taxes and the mandatory fees, and it becomes clear that you have to carefully plan before you buy. It's not an if, but it's a must. It's what allows you to make a well-informed decision and avoid surprises along the way. Foreign buyers can obtain mortgages in Portugal, and several major banks actively lend to non-residents. That said, there may be some differences compared to getting a mortgage in your home country, wherever that is, like LTV loan-to-value ratios, documentation requirements, and how banks assess risk for income earned abroad. Having a good understanding of these can save you time and money, and it will help you approach the process with realistic expectations. Let's start with, how do Portuguese banks view non-resident borrowers? Most banks will finance between 60 to 70% of the property's value for non-resident. That means planning for a 30 to 40% down payment is realistic. The rates in Portugal remain competitive by European standards. Currently, new mortgage contracts typically price around lower single-digit percentages because many loans are variable or mixed, Euribor plus spread. Full-term mixed rates tend to be higher, often around mid-single-digit percentages or even more, depending on the borrower's profile and length of the term. Mortgage terms can stretch up to 30 to 35 years, but banks cap the loan maturity based on age, often around 70 to 75 years old for non-resident borrowers. And what do these banks typically look for? There are four main things lenders assess. Number one, stable income. They'll want to see consistent income, whether from employment, self-employment, or other sources that can be verified. Number two, debt to income ratio. Under the Bank of Portugal rules, total debt service should not exceed 50% of gross income. Many banks apply even tighter limits, around 30 to 40% for non-resident clients. Number three, credit history. A clean, verifiable record in your home country makes your case stronger for sure. And number four, legal status. You don't need a Portuguese residency, but you must be legally allowed to purchase property in Portugal. Furthermore, if your income is in another country, the bank will factor in exchange rate risk, which can slightly reduce your borrowing capacity. Let's move on to documentation and process. The documentation process is thorough, but it's straightforward. You'll typically need a valid passport or a national ID, Portuguese NIF, which is a tax number in Portugal, proof of income, recent payslips or tax returns, bank statements from the past few months, a proof of address, and finally, an evidence of the source of your down payment. Some banks accept English language documents, but certified Portuguese translations can also be asked for. It really depends on the institution. Once your file is complete, the bank orders a property appraisal. Locally, that's called an avaliação, to confirm that the market value is consistent with the loan amount. If approved, the bank issues a formal offer letter, and the mortgage is finalized at the notary when the property deed, the escritura, is signed. From start to finish, you can expect roughly 4 to 8 weeks, depending on the bank's workload and the appraisal timeline. It may also be helpful to go through some practical tips and common mistakes. From our experience advising international buyers at GetProperties, there are a few practical tips that can really make a difference. Get pre-qualified early. It helps set realistic expectations and makes your position stronger when you're making an offer. Budget beyond the purchase price, so include IMT, which is the property transfer tax, stamp duties, 0.8% on the deed, and 0.6% on the mortgage, plus notary, registry, and valuation fees. Avoid rushing. The Portuguese process is rather methodical, so take your time, prevent costly mistakes. Work with experienced professionals. A qualified buyer's agent or mortgage broker can help align the property you choose with what banks would actually be willing to finance. And finally, how can GetProperties support you? At GetProperties, We don't issue loans ourselves, but we act as your independent advisor throughout the journey. We help you find properties that both fit what you're looking for and your financial potential, coordinate due diligence with lawyers and banks, manage communication with lenders and brokers, and oversee your property after purchase through our management and rental services. Now, one final thought. Mortgages are powerful financial tools, but they also add complexity. Going too aggressive on leverage or stretching beyond your budget can quickly turn a good investment into an unnecessary stress. It's always wiser to borrow comfortably, keep reserves for taxes and maintenance, and focus on properties you'd be happy to hold long term. That's the mindset we encourage: informed, steady, and sustainable. If you'd like to learn more about or discuss your own situation, you can always reach us at GetProperties.com. We'll be happy to help you explore the right path forward calmly, transparently, and with no surprises along the way. Thank you.